And it's an exciting day because we don't know, are we seeing 50 basis points, 25 basis points? It seems that we're back to that 50 basis point hike. Why?
I think it's the Fed. Definitely the Fed's giant step back in September changed many things for South Korea, the currency issues, and now the FX pass-through onto the CPI inflation is going to be higher. BOK is definitely concerned about the inflation and the weaker FX, and the Fed has driven this big step hike by the BOK today.
And yet we hear from all of these policymakers across the world warning about the potential economic recession around the world. And of course, Korea is not immune to that. We have seen exports slowing down. We have seen really confidence plunging. How much of a leeway and window of opportunity do they have to keep hiking?
Exports slowing fast and imports rising rapidly as well. So that's a concern for the BOK and the Korean economy. But domestically, the consumption path is pretty solid, at least until first quarter of next year in our view. We think the household consumption, pent-up demand on services is still there. With the higher rates and higher inflation, by next year we think it might slow down, but until then, consumption stories should be solid, and the BOK thinks that would be okay to still make the rate hikes with the solid consumption numbers.
Kathleen, when it comes to potential support for the won, we did hear some interesting murmurings from one of the ECB policymakers saying that you could see more coordinated action. Is intervention something that would be top of mind?
I think the BOK is quite concerned about the level of the currency as well as the rapid weakness of the won at the same time. But I think the BOK is quite cautious in intervening and disturbing the market. They would be very cautious to control the actual level of the currency at this time, but more of a smoothing operation to control the volatility would be on their mind. But going forward, I think if there is another rapid weakness of the currency, there would be at least some action going forward at a rate where we've seen maybe 3-4 weeks ago, and we've also confirmed in the 19 billion down in the FX reserves last month. But other than that, I think they would be quite cautious not to disturb the market participation.
We've seen earnings estimates when it comes to chip makers more broadly falling at the fastest pace that we've seen since 2008. What kind of an impact do you see on the broader macro environment and the data for South Korea, given how dominant this sector is?
I think we've been closely monitoring the U.S. export control against China, and for now, though, we remain neutral and rather confident that the Korean chip makers would not be immediately impacted by the measures. Korean chip makers mostly manufacture memory chips. That's for PCs, consumer goods, consumer IT products, and that's not one of those sensitive products that the U.S. government is closely monitoring about. So I think for now, it would maybe create a more competitive environment for the chip makers, but not to a point where we have to, make the adjustment downward on our export outlook on chips in the next 12 months or so.
Kathleen, when we talk about Korea, we always have to mention the record amount of household debt. And given rising borrowing costs, how painful is this for the economy and just for the broader public as well?
So the pain is growing for sure. But when we look into the composition of the debt holders in Korea, actually more than 60% of the indebted households are top 30% income households. And also more than 60% are around 70% percentile of the top income as well. So mostly very solid middle class households. So for us, until the terminal rate goes above 3.75%, that pushes up the mortgage rate around on average 7.7 to 8. That's coming in second quarter next year. I think that's when we probably see more pain on feeding through the consumption. But for now, I think until this year, the consumption wouldn't be much affected because the solid spending, pent-up demand holding up with the high-income households, indebted households in Korea.
How vulnerable is is the Korean public when it comes to rising borrowing costs and mortgage rates rising. Here in the U.S., mostly people have these 30-year fixed rates on mortgages. What does it look like in South Korea? Because we also know that, of course, the property sector has been so heated for the last few years. But I'll have to hold on for a second because we are getting those BOK numbers. Raising key rates to 3% from 2.5%. So as expected, 50 basis point rate hike. This was expected by 16 of 19 economists surveyed by Bloomberg. So as expected, 50 basis point outsized rate hike to 3% coming from 25 basis points the previous meeting, but back to that 50 basis points. So, Kathleen, continuing our conversation, just your reaction to what we're seeing, and also as a continuation of what I was asking about how the property sector has been so overheated in South Korea and how these rising rates will affect Koreans on the ground.
So this morning's decision in Korea is as expected, 50 basis point hike, returning to the big step hike because after the FOMC in September. I think the BOK from here and on would likely to keep the hawkish stance to prevent further, rising of the inflation expectations and, headline inflation staying above 5% until June next year is what Governor Ri recently had commented. And I think those hawkish signal is likely to keep the market on alert for, coming rate hikes in November as well as early next year. And coming back to you on the real estate market issues, I think for Korea, the downturn is what we are expecting, but it's not as large collapse as something we expect in Australia, where we're expecting 30% downward direction on the housing prices. Because in Korea, at the same time of monetary policy tightening, there's the macroprudential measures for real estate market actually loosening at the same time. And real estate market is very sensitive to policies. And for the new Yoon government to reverse, what the last Moon government has done, the tightening of the real estate market, I think that would offset some of the downward pressure on housing prices. So it would be maybe more mild downturn on the households in Korea versus other countries.
Kathleen, so in light of the half-point hike today, there's already parts of the market talking about another half-point come November. What does that CPI print need to look like? And if it's a little bit softer, do we then expect just a resumption of quarter-point hikes?
I think it comes down to core inflation now. So the headline has already peaked in July, and the oil prices coming down has put downward pressure on the headline now. So we're closely watching the core inflation numbers, and I think the BOK is also doing that as well. So if the core prices continue to rise above 4.5% we've seen in September, I think that would be a signal where the BOK needs to, be more heightened about the inflationary pressure. But for us, our forecast is that the core inflation would peak in October as the domestic demand pressure slowly moderates, and then we'll probably see the BOK coming back to 25 basis point, but on a regular basis until February next year.